Okay. So, yesterday we had a brief discussion on interest rate risk. Today, let's have a discussion on some of the instruments that we often use to hedge foreign exchange risk. If I were to name the ones that are there in our syllabus, we have the forward contract, we have the money market hedge. Money market hedge sometimes is tested in the exam. I have seen two questions in the exam kit, not very recent questions, but yes, two questions where they specifically tested you on using the money market hedge. Then we have foreign exchange futures, we have options on foreign exchange, and there is the forex swap, there is the currency swap, and then there is the multilateral netting discussion towards the end. So, when it comes to looking at foreign exchange risk, I think we should understand why exactly does the risk originate in the first place. Suppose I am a person in India and I have to do transactions with someone in another country. Naturally, I cannot. In a lot of occasions, what will happen is I'll have to invoice in the currency of that country, and that itself will be the main cause of foreign exchange risk for me. Let's understand what that means. So there's a student in UK and he wants to join AAA with me. However, he insists that the invoice I send him should be in pounds. ठीक है, I enroll him for AAA and send him an invoice worth £300. Now, Satyamed is in India and I have to do my accounting in rupees, which is my functional currency. Now, at the time of recording the sale entry, I will have to convert the I will have to convert the pounds into my currency, which is the rupee. Now, on the date of sale, which is 19th of April, the exchange rate is £1 equal to 100. I mean, who better than ACCA students to know the pinch of, foreign exchange rates fluctuating. On the date when I made the sale, I recorded an entry Ritwik to sales 300 into 100, that is 30,000. But when he pays me on 19th of June, which is 2 months later, the exchange rate is 104 rupees is equal to £1. So on that date, when I record the entry, he remits 300 rupees, sorry, 300 pounds from UK. But when the money hits my account, it is 300 into 104, that is 31,200. Now I had invoiced or I had recorded a receivable worth 30,000, but I ended up getting 31,200. So that 1,200 is my foreign exchange gain. This is my upside. Along with that, I could also have a downside where the exchange rate has fallen lower, which is why I end up collecting lesser amount than I was supposed to. So this short receipt that I have because of the fluctuation in foreign exchange rate, that is my Forex risk. Or we also call it the transaction risk. There is the transaction risk, which is, for the importer, exporter, anybody who is buying goods or selling goods. Along with that, you would also have the translation risk, which is basically the risk that you face when you convert the financial statements of a subsidiary which is denominated in another currency into the currency of the home country. So the exchange rate fluctuation that you face there leads to again another foreign exchange risk, but that is translation risk. Okay, now for you to know how to read a foreign exchange quote, I always read it from the bank's point of view, and that has always made things easier for me. For example, if I write £1 equal to INR 100-105, that means bank buys £1 at 100, bank sells £1 at 105. Now, why do I always think about it from the bank's perspective? See, bank is a businessman at the end of the day. If it buys at a lower rate and sells at a higher rate, only then it will be able to make money, and only then the business model makes sense for the bank, which is why uh, I prefer reading the Forex quote from the bank's point of view. Now, if I were to look at, say, a simple situation, Aditya has to send £400 to his family in the UK. He will go to the bank, and what will he do? He'll say, I have to send $400, sorry, 400 pounds in UK. The bank will have a very simple statement. You want 400 pounds? Okay, we will give you 400 pounds, but in exchange, you have to give us something, and that something is rupees. So I will go to the bank, that Aditya will go to the bank and he will buy pounds, and he will have to give. That is basically, he will have to sell or the rupees that are there with him, he'll have to give those rupees and buy pounds in exchange. Now, Aditya is buying pounds. That means bank is selling pounds, and bank sells at 1 pound equal to 105. So 400 pounds will become 400 into 105. That is 42,000. And this is how, one would translate the foreign exchange code from one currency to another. Now, one of the easiest instruments to tackle the foreign exchange risk is the forward contract. Now, what does the forward contract do? Yesterday, we saw FRAs. Similarly, in case of foreign exchange risk as well, you have a forward contract. What the forward contract does is it locks in today the rate at which you are going to transact in the future. So, a forward contract allows a business to buy or sell a currency on a fixed future date at a predetermined rate. That is, sitting today, you are going to decide the rate at which you will buy 300 pounds for paying for your SBL exam, something like this. So, if you are locking in the rate at which you are going to deal in foreign exchange in the future, that is called a forward contract. These forward contracts are not exchange traded contracts, and they can be of any size, they can be of any duration, any maturity. That is not the case for foreign exchange, uh, you know, futures or other such instruments. These are quite limited in terms of availability because uh, not all currencies can be converted to every other currency. Like most currencies will have a quote with respect to the dollar, but I mean, an Indian rupee might not necessarily have a quote with, say, the currency of Kazakhstan, and in that case, you will have to make use of some currency like the dollar to which both of these are pegged, and then you will have to calculate the exchange rate indirectly. Now, along with looking at the forward contracts, there is an instrument that is known as the money market hedge. Now, can you tell me what is the money market, not the hedge, just the money market? Shruti, what is the money market?
So where transactions takes place, buying or selling of
The
any
money market
instrument.
is the market for short-term instruments. Okay, so instruments like certificates of deposit, commercial paper, all of these come under the category of money market instruments. Okay, now if you are using these money market instruments in order to hedge a position, that instrument is known as the money market hedge. Now, Liverpool PLC must make a payment of $450,000 in 3 months' time. Now, we know that the one way to get rid of foreign exchange risk is to basically have, uh, say, for example, I have a foreign exchange payment and I want to get rid of the risk of foreign exchange fluctuation. In that case, what I will do is, if I have a foreign exchange payment to make, I will deliberately, in a force fed manner, I will try to create a receipt deliberately on that date so that against the 4,50,000 ka payment that I have to do, there is an opposite receipt that I create worth $4,50,000 on the same day. And the 4,50,000 payment, 4,50,000 receipt, they cancel each other out. And what you get is you have zero foreign exchange rate exposure on that day. So to understand that, let's quickly go through what do you mean by the opposite position. Say I have to pay $1 lakh after 2 months. The rate today is $1 equal to 70 rupees. If I made the payment today, I would have an outflow of INR 70 lakh. But I don't have enough cash right now, so I decide to wait for 2 months. And when I wait for 2 months, the foreign exchange rate fluctuates to $1 equal to 72 rupees. So payment after 2 months will be 72 lakh. My risk is the additional outflow of INR 2 lakh that I will face if I wait for 2 months. Now, let's understand what do we mean by taking an opposite position. If I wait for 2 months, I end up paying 2 lakhs more. Now, I have to pay how many dollars? I have to pay $1 lakh. Now, to create an opposite position means, see, my original position was that of payment. If I have to pay USD and the foreign exchange rate goes up, then naturally there will be a higher payment that I end up making. Now, if I have to get rid of this risk, what I do is I deliberately I get in touch with a customer. I force him to make the payment to me on the same date on which I am supposed to pay to my supplier. So I receive I was supposed to make a payment of 1 lakh, and now I have created an opposite position in which I will end up receiving 1 lakh. If I were to receive 1 lakh dollar today, I would have received 1 lakh into 70, that is 70 lakh. If I wait for 2 months, how much will I receive? If I wait for 2 months, I will end up receiving 1 lakh into 72, that is 72 lakh. So if by some stroke, see what happens here is the excess outflow of 2 lakh in case of payment gets compensated by way of an excess receipt of 2 lakh if I were to receive 1 lakh 2 months from now. If I were to receive 1 lakh today, I would get 1 lakh into 70. If I wait for 2 months, I would get 1 lakh into 72. So I would get 72 lakh rupees if I wait for another 1, 3, whatever months. So यहाँ पे the excess payment that I am making is matched with the excess receipt that I would get if I deliberately were able to create a receipt of 1 lakh dollars on the same day. So if by some stroke of luck I am able to get a receipt of 1 lakh dollar on the same day on which the payment is due, then the risk of additional cash outflow of 2 lakh on account of payment will get cancelled out due to the 2 lakh excess receipt in INR terms on the same day. And this is exactly what the money market hedge instruments try to exploit. If you have a position for payment, what they do is they deliberately try to create a receipt position on the same day so that the receipt and payment of foreign exchange cancel each other out, and the overall risk is nullified or minimized. Just have a look at this part. What is an opposite position? Tell me when you want me to scroll. So, be it, have we started the recording? Yes, we have. So many of our risk management instruments make use of the opposite position in order to get rid of the risk.
Done, sir.
Chalo. Let's have a look at a situation where we are hedging a payment. Liverpool PLC must make a payment of US dollar 4,50,000 in 3 months' time. You know what? I'll not take up hedging the payment because a video to this effect is already there on the YouTube channel. So I'll not waste your time on this. एक hedging a payment का video YouTube same channel पे है, so I'll not waste time. I just recollected. We can, your exam is 4 days away. I don't want to waste time on this. We can discuss something else. We can discuss, say, for example, the futures contract, because that video is not there on the YouTube channel. Now, futures are again similar to forwards. The only difference is that futures are stand or of a standard size, and they are traded on the stock exchange. Okay. The aim of currency futures is to fix an exchange rate at some future date. As a student myself, I always got this confusion ki yaar, what do you mean by buy forex future and sell forex future? So to convince myself, I came up with a solution. Whenever they say buy forex future, I just told myself insert the word in. Buy forex future means buy foreign exchange in the future. If the question says sell forex future, what it means is sell foreign exchange in the future. So by adding the word in, for me as a student, it became very easy whenever they kept on using the words buy forex future, sell forex future, and I got a very clear idea in terms of what is happening. Am I buying or am I selling? Now, these are 8 steps that you need to follow in the futures hedging, but we'll not look at the steps. We'll first of all look at the question. Okay. It is 15th October. चलो एक बार आप question देखो तो. You have to use the futures hedge. Just read the question, then we'll go through the solution. Okay. First thing you should do is identify the currency of contract. The currency of contract is that currency in which the standard contract size is written. For example, here the contract size is 2 lakh euro. That means euro is the currency of contract. Okay, write that down. Step 2 is ask yourself the question, do you need to buy CC or do you need to sell CC? Do you need to buy the currency of contract? Do you need to sell the currency of contract? In this case, it is 15th of October, and the treasurer has identified the need to convert euros to dollars to pay a US supplier $12 million. Okay, so what I have to do is I am a person whose currency is euro. I have to pay the supplier whose currency is dollar. So if I have to pay dollar to Shruti, first of all, I'll have to buy dollar from the bank. And when I buy dollar from the bank, I'm not getting it for free. I'll have to give something in return, right? That what is the something in return that I have to give? Euro. So I have to sell euro to the bank and buy dollars and execute my transaction. So I am selling the currency of contract. I need to sell euro in the future. That is, I need to sell euro futures. Now, how many contracts? You are standing on 15th of October. Okay. This is a over under hedge wala situation, by the way, which is why I have taken up this question. I'm going to sell euro futures. Future price on this date is 1 euro equal to $1.335. ये कहाँ से लिया मैंने? ये यहाँ से लिया. Uh, the tick size is this. Futures price is 1.335. Spot rate is 1.330. Future price is 1.335. Now, you are going to sell euro future and the future price is $1.335 equal to 1 euro. Future price means I am locking in the rate at which I will transact in the future. तो future में जब मुझे $12 million I have to pay, what is the rate I am locking in? I am locking in 1 euro equal to 1.335. So in the future, when I have to pay $12 million, I'll have to go and sell 8988764 euro to the bank, get $12 million in exchange and pay to Shruti, who is my supplier. ठीक है. This is the number of euros that I am going to need in the future for making a payment of these many dollars. ठीक है. What is my contract size? My contract size is 2 lakh euros per single contract. In the future, I have to sell 8988764 euro to get $12 million. Contract size is 2 lakh dollar. So एक contract is for 2 lakh, so 2 lakh euros, not dollar. One contract is for 2 lakh euros, and I need how much? I need 8988764 euros. So how many contracts will I need? I will need 8988764 upon 2 lakh, that is 44.95. Round it up to 45 contracts. ठीक है. That means I have to sell 45 euro futures in order to exchange the euros for against $1.335 per euro, and I will get $12 million in exchange. I need the $12 million to pay to my supplier. The how many contracts calculation, as I told you, doesn't really have an impact on the calculations that we do using these steps. But the thing is, in your exams, there is a separate mark allocated for this, which is why I spend a little more time. Write that one step clearly. ठीक है. Identify the expiry date. When do you need to make the payment? The payment has to be made in November. So what you should do is you should buy the December futures. उसके बाद जो भी settlement date होगा, you should buy those futures. Then once you have decided whether you have to buy, sell, and how many units, just contact the exchange, sell the futures and pay the margin. And then close the future contract by taking an opposite position to calculate gain or loss. Now, future contracts are rarely settled by actual delivery. They are mostly settled by taking an opposite position and either receiving or paying the net amount. The original contract is to sell euro. So, to settle the contract, I will have to take an opposite position, which will be to buy the euro. I will have to buy euro futures on 20th of November. ठीक है. 20th of November को futures price कितना है? 1.324 is the future price. That means if the original contract was to sell euro for 1.335, the opposite position contract is to buy euro for 1.324. And why are we talking in terms of euro? Because euro is the currency of contract. Because यहाँ पे standard contract size is given in euros, so my currency of contract is also the euro. Now, original contract is to sell euro at $1.3350. Opposite contract will be to buy euro at $1.324. What is the gain per euro? The gain per euro is $0.011. So in the hedge that you have set up, the futures hedge, for every euro, you have a gain of $0.011. ठीक है. Total gain in futures contract is basically 45 contracts into 2 lakh euros per contract into gain of $0.011 per euro, and you will have $99,000. Now, had I not undertaken a futures contract, then I would have to use the spot rate on 20th of November. On 20th of November, what is the spot rate? 1.319. You see, in a futures contract, there are always two streams running. One is you have to buy or sell at the spot rate, and then you have to settle the futures contract. Uska gain or loss you have to adjust here. ठीक है. So, I what happens in this case is What if I have not undertaken a futures contract? Then I would have to use the spot rate on 20th of November. On 20th of November, the spot rate is 1.319. And if the spot rate is 1.319, to make a payment of 12 million euro, I would have to give how much? I would have to give 9097801 in euro terms, and that would be my outflow. Okay, in euro terms. If I were to settle today, I would have to pay using today's spot rate, which is 1.33, sorry, which is 1 euro equal to 1.330. अगर आज पे करता तो I would have to pay 9022556. If I wait till 20th of November, I end up paying 9097801. That means without or if I don't have, if I have not taken some sort of a cover, foreign exchange cover, then I will end up suffering a loss of 9097801 minus 9022556, which is without any hedge cover, I suffer a loss and end up paying how much more? Had I paid today, I would have paid 9022. I wait for some months and I end up paying 9097. So I end up paying 75,245 euros extra. ठीक है, 75,245 euros extra I have to pay if I wait. ठीक है. Now 75,245 euros is equal to how many dollars? Is equal to 99,248 dollars. So that means without a hedging cover, this is only for your understanding. Don't write this in the paper. This is just to demonstrate you how the gain or loss is actually working. Now, the outcome, if you settle at the spot rate on the actual settlement date is 9097801, then what you have to do is you have to calculate the net receipt or payment. Payment in step 7 plus minus the gain. Now, what is the gain? The gain was $99,000. This $99,000 you then convert it into euros and you have your net gain or loss position, which is 9022774. Isn't it dangerously close to this number, which is the number I would have paid if I would have used the spot rate today? But I waited and all of that. Then foreign exchange का cover वगैरह लिया, foreign exchange future cover, and I was able to adjust the gain and have a net outflow of 9022774. Now just read this once, original contract and futures contract wala part. Yes, Shruti.
सर इसमें ओवरहेड वाला पार्ट भी था ना आपके ऊपर, उसका एडजस्टमेंट।
उसका बताता हूँ, उसका बताता हूँ, पहले ये देख लो. यहाँ तक देख लिया?
Yes, sir.
यस सर।
Okay. Now, एक second. What is the total amount that you needed to hedge? First of all, how much was the hedge that you were required to set up? You were required to set up a hedge worth 8988,764 euro और 12 लाख डॉलर. ठीक है. How much did you actually end up hedging? How many euros? 45 into 2 lakh. How much was your exposure? Your exposure was 8988,764. That means you overhedged for 11,236 euro. ठीक है. Now pay attention. What does it mean by overhedging? You needed a cover of 8988. You ended up with a cover of 90 lakhs. ठीक है. You calculate the amount that was overhedged. Now, if I need to do my calculations, see, I expected to do what? I expected to buy 8988,764 from the bank to make the payment. मैंने क्या कर लिया? I took 45 contracts. So that means I reached a position where now I will have to buy 45 contracts into 2 lakh euros from the bank to give to my, I mean, that is the amount I will end up buying. But what use do I have of this 11,236 extra euro? ये extra euro का मैं क्या करूंगा? This is euro, right? This is
Return back to bank.
I will return it to the bank, but should I return it right now or should I return it later? When am I going to buy this money? Acha, buy this money. nahi. When am I going to do this exchange? I'm going to do this exchange after 3 months. Correct? I'm going to do this exchange after 3 months, in which case, I will have 11,236 euro extra. How do I tackle this 11,236 extra euros that I have received? I have no use of it now. What will I do with it? I have no use of it. So what should I do with this extra cash, extra euros that I have? Keep it with me or give it back to the bank? Karan, what do you think? Sanjay, what happens to 11,236?
I think we have to give it to the bank on future date or the date of transaction.
You are saying we have to give it to the bank. Okay. On which date, but so because I want to decide the rate that I should be using. Yeah.
15th November.
Okay. So you are saying whatever is the spot rate on that date, we'll have to return, or is there any other rate that we should be using?
Uh, I think we have to use the spot rate on that day.
What do the others have to say?
So we can use the forward rate as well.
Any specific reason for that answer?
So because forward rates are available today also before the transaction date.
Okay. So usually what happens to an overhedge in such situations is we use the forward rate on that date in order to exchange the amount with the bank. Now, more than this question, now this question is in certain ways a dummy question. If you open the exam kit, there's a question called Gogarth Company. ठीक है? Gogarth Company is a question on overhedging. Again, so the sheets that I have sent yesterday on the group, you will find this Gogarth Company. I think sheet number 13 or 14, you will find this question. That is also a question on hedging. There also I have described in great detail how, but there it's not such a simple way out. Here, though, this 11,236 overhedged amount, we will exchange it using the using the forward rate in in on that particular date. वो जो क्वेश्चन है दैट हैज अ लिटिल मोर लेयर ऑफ डिटेलिंग, तो वो गोगार्थ कंपनी वाला क्वेश्चन डू इट प्रॉपर्ली. देयर इज एक और क्वेश्चन है लर्कशैल कंपनी, वो भी देखो. दैट्स अ गुड क्वेश्चन. Don't go before. Usually, I avoid checking questions before 2018. because they contain certain facts or details that are not there in the updated AFM syllabus. So AFM syllabus जैसे in SBR for example, they have gotten rid of embedded derivatives and all of these things. वो हटा दिया है. तो आपके इसमें भी वो जैसे AFM में भी they have gotten rid of quite a few complexities. So if you look at the old questions, you will unnecessarily lose confidence 4 days before the paper. So don't do it. ठीक है. Okay. Similar to foreign exchange futures, you have foreign exchange options. If you remember what we saw yesterday in case of interest rate risk, we had to choose an exercise price on the basis of the amount and the option premium. Similarly, for foreign exchange options also, we will have to choose an exercise price on the basis of the strike price and the option premium. And then you will have to decide whether you are buying or selling foreign currency in order to make sure that the net outflow is minimized or the net inflow is maximized. That will be the choice for the foreign exchange option. That will help you decide the strike price, and then other calculations are pretty much the same. One more question that is very frequently asked, not very frequently, but 2 or 3 times I have seen this question, which is on multilateral netting. So multilateral netting, but it doesn't come for like a lot of marks. It comes for say 6 marks at best. So that is again, that's an easy part. It's there in the sheets. Just go through it once. I'll send you all the foreign exchange and interest rate risk sheets on the group. Just make sure that you check the multilateral netting. It's not specifically tough. Like right now, I dropped the money market hedge because uska video is already there. Similarly, the multilateral netting is something that you can understand only by looking at the sheet. If even after that you have a problem, you let me know. For your exam on the next Friday, it's necessary that you focus on theory